Ladies and gentlemen, the markets soared higher on Friday on news that India is looking to come to a deal on trade with the United States. Now that sounds great and all, but is that really enough to avoid a recession? To give certainty to companies to begin investing again? Probably not. Now, not to dampen the mood or rain on the parade, we're going to get a lot of new information coming next week, and the stock market is going to be insane. Here in this video, I will give you the rundown of what to know heading into next week and my current thoughts on this market. But first, before we get into all of that, take a listen to what Tom Lee said on CNBC on Friday about this market. It is titled, "There's still a big window for markets to have a big rebound."
From here, with all this volatility, where are we going? Let's ask Tom Lee. He is FundStrat's managing partner, head of research, also a CNBC contributor with me here at Post 9. Thank you for being here. So, Liberation Day didn't go as you thought. You apologized publicly for that, which I think a lot of people appreciated. You're always a stand-up person about that. What now? Where are we going?
Well, I think a couple of things that we're thinking about is we know markets have gotten very pessimistic. They've priced in a 60% probability of a recession. And if tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation.
We're in a bear market. I mean, we're in a bear market, right? I mean, it almost doesn't matter, textbook, whether you say we are or not. It's like so many stocks got just absolutely destroyed before this uncertainty happened in the market.
Yes. I mean, if we define a bear market as stocks feel like a grind or you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, we're not at that criteria yet. But I think it feels like a bear market for the average person.
Are we supposed to buy into that or just stay cautious and on the sidelines, don't do anything, sit on our hands? I don't think people know what to do. And I'm not just talking in the CEO suites because they obviously don't know what to do. How can you? So what is the investor supposed to do?
Yeah, I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and that's the long-term brain, I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50, or when the percentage of stocks above the 200-day drops to 15. Those are almost guarantees of positive 1-year, 3-year, 5-year returns. So it depends which brain you're wearing today, but I'd say the majority of our clients are trying to be tactical.
I hear views of, well, it's really hard to get uber bearish now because a headline at any moment, as I said in the open here, the market is waiting so hard for some bit of good news that if you're on the wrong side of that, you get a day like you had on Wednesday.
Yes. I mean, if I was to oversimplify the framing of this, U.S. and China have absurd levels of reciprocal tariffs at the moment. And if you believe those are in place, then the global economy is in trouble and you should be bearish. But if this is a matter of who makes the overture first or blinks, but we know it de-escalates, then I think the downside it comes off dramatically, and I think stocks can actually do really well into the rest of the year.
So you'd be a buyer right now?
Yes, and with the apology that, of course, I didn't think Liberation Day was going to be this draconian, but yes, I would be buying stocks today.
What would you buy?
Well, one of the things we did for our clients last night is to look at what's called Walter Deemer calls sold out stocks, which is worse than oversold. Sold out stocks don't go down because there's a lot of bad news priced in. Mm-hmm. There's a lot of stocks that didn't make new lows on Tuesday, April 8th. They made their lows a month ago, and they had lower volume on April 8th. Those are what I'd call washed out stocks. A group that I think's washed out is the Mag 7. So I'd look at Mag 7 as a place to really expect a rebound, including stocks like Tesla.
Okay. You used the word draconian. That was your word. But I'm going to play off of that and say, well, what if we're in a post-draconian period where, because of that, we're left with the rubble of that decision-making in the White House? And the damage has been done. CEOs have no visibility whatsoever. Do you see this consumer sentiment number today?
Yeah, they're awful.
Do you see where inflation expectations are?
Yeah, they've gone bananas.
Do you see what earnings expectations have done recently?
I mean, there's no ability to make guidance.
So what if the damage is already done now?
That's right. Now, we have to keep in mind this has been 10 days. So it is a shock, a high amplitude shock, but only of 7 days. So someone can restart the patient's heartbeat. I think that the White House is now keenly aware that Main Street can't handle a huge deleveraging because it is going to lead to job loss, and he's listening to CEOs. So I think there's a really big window to repair the bulk of this damage. And at the other side of this, of course, is that we have reciprocal tariffs in place that are acceptable. We have tax policy that's changing and less regulation. So I actually think the 2026 outlook is still quite good.
Which puts are you, so to speak, more reliant on now, a Fed one or a Trump one?
Well, I think there's a call at work and a couple of puts. I think that there's a Fed liquidity put that was in evidence today by the Fed.
When Collins said what she did?
Exactly. And we know the Fed put on rates strikes much lower. The White House has a policy put because we know that you can't brinksmanship the global economy to a halt just to try to get China to blink. And I think that the call is, there's a negotiator call, which means I think the White House exercised the Navarro call and replaced him with Besson.
And as you guys know, lately I haven't agreed with everything Tom Lee has said. Most things I've actually disagreed with. I agree with the bulk of what he said. There could be a window here to repair some of the damage done, but I don't know how likely it is, in all fairness, because how do you repair the damage that's done? You have to bring China to the negotiations table. And China doesn't seem like they want to negotiate. Now, in my opinion, I think this whole tariff situation is all about TikTok, to be honest. Like, that's what Trump really wants, is 50% ownership of TikTok, and to save that in the U.S. Keep it in the U.S. forever. Doesn't look like China wants to sell that. It doesn't look like China really wants to negotiate too much. So you can have all these deals with other countries, which inevitably will get done. And I think that's priced into markets here. But without China, I think it's going to be really hard to repair that that damage, right? Now, from a kind of investing perspective, from a recession perspective, this 90-day pause on tariffs, it's good, but it's still uncertainty. We don't know what deals are going to look like. Companies cannot, put CapEx to work until we know what tariffs are going to look like in Vietnam and Malaysia and Cambodia and India, some of these important countries that are now heavily tariffed. Now, with deals being done, that may be finalized, but I think there's still some nervousness that deals could fall through at certain moments. So maybe until the pen hits the paper on these deals and it's actually finalized, there's not going to be much confidence here. And I think this is really, a CapEx issue, a confidence issue from companies where they're pausing everything. And companies that will be tariffed, that will be negatively impacted from this. All companies, to some extent, will have some tariff burden from this, you would imagine. They're going to start looking to reduce their workforces. They're going to be looking to raise margins internally. That could be positive for AI, but it could be bad for the labor market. And that is something we need to keep in mind. But I do think, again, Tom Lee has a point. It's only been 10 days, and you could restore some certainty. You could avoid some of the recessionary pain. Question is that priced into markets here? And is there further room to price that to the upside? Markets are down about 13% from all-time highs here. You could go up a little bit more, but I think it's really hard to say the coast is clear until a lot of these deals are actually worked out. Now, the other side of this is we're not going to have much clarity from corporate America, okay? There's not going to be a lot of guidance. It's not going to be a lot of, clarity on really anything. And let me give you the rundown of major companies that report this upcoming week. Starting off Monday in pre-market, you have Goldman Sachs and M&T Bank. Monday in after hours, you have Applied Blockchain. That is a data center AI name. Definitely going to be important what they say about data center investments. Are companies pulling back? Are they pausing a bit? That's going to be important. Tuesday pre-market, Bank of America, Citi, Johnson & Johnson, and PNC, as well as Ericsson and Albertsons. Tuesday and after hours, you have United Interactive Brokers, JB Hunt. Wednesday pre-market, ASML, US Bank Corp, Abbott, Progressive. Wednesday and after hours, Alcoa, Bank of Ozark, CSX, Kinder Morgan. Thursday in pre-market, you have TSMC, United Health Group, Huntington, American Express, Ally Bank. And then Thursday and after hours, you have Netflix and Independent Bank. Obviously, TSMC for that AI story is going to be, I think the biggest company to report this week, because TSMC is going to give us a little bit more clarity on semiconductors, right? How is demand looking for semiconductors? If demand is good, then, maybe these beaten down AI stocks are attractive buys here. I think TSMC is actually going to be very important this time around. American Express also important. How is the consumer doing? I think we've gotten so downbeat on the consumer that maybe if American Express has positive things to say, then we could start to maybe not be as negative. So that is a potential positive catalyst, although it could be negative if they indicate consumers are slowing down even further. And then Netflix obviously is important. It usually moves big tech, but Netflix is not really a huge target for tariffs from what I can see. It's all digital and virtual, so I don't think Netflix has too much of an importance here, and I don't even think a Netflix guide means anything for the broader markets. It's really going to be like Apple that is, I think, one of the biggest ones this earnings season, as well as Nvidia and maybe even to a lesser extent like a Microsoft, or some of those other names are going to be a little bit more important than Netflix this time around. But still, definitely want to pay attention to the earnings for this upcoming week. Now, we're also going to get some economic data, a lot of soft data as well. Starting off on Monday, consumer inflation expectations. Fed Barkin, Fed Waller, Fed Harker, and Fed Bostic will be speaking. Tuesday, you're going to get export prices, import prices month over month, New York Empire State Manufacturing Index, Fed Barkin that speaks again, Fed Cook that speaks, and some GDP data coming out from China. On Wednesday, you're going to get retail sales month over month. Now, you're expecting a really good number. You're expecting positive 1.3%. Last month was positive 0.2%. Okay, so you're expecting some really good numbers there. If those are bad, well, recession fears, okay? Simple as that. Business inventories month over month, NAHB Housing Market Index. Fed Jerome Powell speaks at 1:30 on Wednesday. We really want to see what they have to say about providing liquidity to the bond market. As you heard in that clip from Tom Lee, Fed Cook said basically they will support the bond market if they need to. They will provide liquidity if they need to. That would most likely be a quantitative easing of them actually going out and purchasing bonds, because it's clear like China, Japan, or some international players are selling bonds. They're putting pressure on bonds. And when you start to get the bond market that breaks like that, that's not good. That can break the whole, financial markets. That can break the economy. That's just a bad situation to be in. So Jerome Powell on Wednesday of this upcoming week will be very important. Now, building permits, housing starts, initial jobless claims, Philadelphia Fed Manufacturing Index, all come out on Thursday. Fed bar speaks, Fed balance sheet. And then Friday, you really don't have anything, but you do have a speech from Fed Daily. Again, I do agree with Tom Lee here. The markets are washed out. The percent of stocks trading above their 50-day moving average hit 5% at the lows. For context, in 2022, the worst it got was about 10%. So you're like twice as washed out as where you were in 2022. Now, if you look at the RSI on a weekly candlestick chart as well, things have started to recover a bit, but still only at 39. You got the most oversold you have been since the COVID crash. Usually when that happens, it does tend to be a bottom. But again, the big question is, are we heading into a recession? Is the damage already done? And it's only been, again, 10 days. I think that's where I kind of agree with Tom Lee that things could turn around. It's only been 10 days. But if it's another month or two and there's still not many deals done, that's where I think we really start to grow the recession probabilities at this point. Just, again, my thoughts. Let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.